All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options midweek update. I wanted to jump on, walk you guys through some things that we're seeing on our side as we go into the second half of this week. We've been talking the last couple of sessions on how news-driven this market has been. We definitely have a lull in the news cycle this week, which is certainly causing some changes in overall market environment. I want to talk you through some of that, and then also walk you through some trades that we're looking at for the rest of this week. We certainly have some really good candidates to consider for the rest of this week. As always, if you have any questions at all, feel free to post those in at any time during the session, and I will get to those right away. If you're reviewing the recording, feel free to post a comment on the video, or you can email me directly, mike@netpicks.com. More than willing to connect and help out with any questions you might have. So let's go ahead and start out by talking through market big picture. I always like to start out with the daily chart of SPY. That's what you're looking at here on the screen. I think it's crucial to look at this chart just to gauge overall market sentiment. I'm not using this chart to help produce entry and exit signals. I'm using this chart to help me determine how aggressive I want to be. Do I want to use more weekly or monthly options? Do I want to use more long calls and long puts, or do I want to use more vertical spreads? And do I want to use my normal position size, or do I want to cut back a little bit? Over the past few sessions, I've talked through how I've been cutting back. I've been using a lot of vertical spreads. I've been using around 50 to 75% of my normal position size. And that was solely based off of the uncertainty that was there because of the outcome of the elections. We now have the COVID-19 numbers. We have the pandemic numbers picking back up. There's uncertainty whether we're going to get another round of stimulus or not. There's still uncertainty out there. But the big headliners, the big market potential moving events are past us now. I am starting to get back to more of a normal approach, meaning I'm looking to use normal position size. I'm still using a fair number of vertical spreads, and I'll talk about that more in just a moment, why that is. But definitely not as concerned with the news cycle as what we were just a few weeks ago. I definitely think the market's going to stay active going into the end of this year, but I don't think you have to be as conservative. I think there's going to be a tremendous opportunity between now and the end of the year. From a technical perspective, if we take a look at SPY, you will see that we did break up and make an all-time high Monday morning. 364.38, the high of the session on Monday, is our new reference point on the upside. That is a new all-time high. If we get a reversal back higher here over the next week or so, that is our point of reference on the upside. The key on Monday's session is look at the candle. The high was made first thing Monday morning, and we spent the rest of the day selling off. In fact, we closed near the low of the day. If I bring up my data box, you will see that that range on Monday was pretty extreme. The high at 364.38, low at 354.06. Not very often that you're going to get a $12 range from high to low on SPY. Very, very active session. Also important to recognize the formation of that candle. Even though it was a very strong open, very strong first part of the session on Monday, that was a pretty weak close. To see selling throughout the afternoon and to close near the lows of the day indicates a near-term top may be in. Right? We just got overdone on the upside. Not saying the bottom is going to fall out, not saying this thing is going to crash. We're just in the near term, we're tired. And we saw a significant reversal candle there. It did come on explosive volume as well. I mean, the volume on Monday was well over 150 million shares. Since then, we definitely saw a lower open Tuesday. Started to rally back up Tuesday. You can see what the market's doing today. The strength is all in the NASDAQ and the S&P. The Dow and the Russell are actually negative. We continue to see this rotation between markets right now. A lot of indecision. What I am expecting here over the next couple of days on out to the next couple of weeks, I would expect a continued pullback. I want to see us test some of the moving averages below us. The first one being the 8-period EMA. It is currently sitting at 348.71. I'd love to see a pullback into that level and then reassess. Could we use that as a springboard back up to the highs? We'll see what happens. We start to break some of these moving averages on the downside. Below the 8 EMA, you've got another little air pocket down to the 20-period moving averages, both the simple and the exponential. Those are the green lines sitting down below us. We are still extended. On the upside, would still love to see a deeper pullback. We'll just want to wait and see what happens. Everything I'm seeing here market wide screams of a tired market. But again, markets don't have to reverse immediately. We can see overbought, stay overbought longer than any of us expect, right? So again, 364.38 is our reference point on the upside as an area of resistance. And the first area of support that I'm looking at is down at 348.66. Again, volume continues to be pretty darn good. Yesterday's session, right around 80, just over 80 million shares, another good number. Here today, definitely taking a step back as far as volume goes today. We still have a little over an hour to go in the session, but we're only sitting at 32 million shares today. So very mixed market today on very low volume. And when I say low volume, compared to what we've seen over the past couple of sessions. The internals today, I talked about there being a mixed market. You can see the internals are very mixed as well. The volume ratio on the NYSE or the New York Stock Exchange, right around -2 to 1. What volume we do have definitely favors the names moving on the downside. On the NASDAQ, the volume ratio at 1.77 to 1 positive, slightly positive on the NASDAQ. Very mixed volume ratios there. The advanced decline line, plus 100 on the NASDAQ, which is very interesting because if you take a look, you've got the NASDAQ futures up over 220 points, but you've only got the advanced decline line at plus 100. This is not across the board buying. It's not across the board buying in every area. It's just the key. And sorry about that, guys. I lost connection there for a brief moment. If you guys can give me a quick sound check, I would certainly appreciate it. Let me know that you're hearing me okay. Looks like my charts are back up, which is great. Looks like my volume is back as well. So if any of you out there listening live, if you guys could just type in that you're hearing me okay, I would greatly appreciate it. And we'll just continue to move forward here. So what I was talking about before I lost connection is when you take a look at these internals, the problem is on the NASDAQ, yes, the futures are very strong, but the strength is only in a couple of names. You've got Apple up a couple of bucks. You've got Amazon up 76. You've got Facebook up 2. It's the same group of tech stocks that have been super strong for most of this year. They continue to do the heavy lifting. This is not across the board buying. And the reason I point that out is that when it's not across the board buying, it doesn't take much to get a reversal. And here we are going into the close and we're getting another move to the downside. Very, very typical. This is why I look at the internals, guys. When you come in and take a look strictly at the index numbers, you turn on CNBC and you see what the overall market's doing. It doesn't give you the whole picture. It doesn't tell the whole story. When you take a look at these internals, it's not a surprise at all here to see this market heading lower into the afternoon because it wasn't across the board buying. It was just a few key names that were strong enough to prevent any type of early weakness from kicking in. Now we're starting to see a move back to the downside. In fact, we are just now getting our first sell program of the session. We just got our first near minus 1,000 tick rating. When you see a minus 1,000 tick rating, it indicates a strong sell program where you've got 1,000 stocks down ticking at the same time in the NYSE. What I want to see here is clusters of minus 1,000 tick ratings. That could potentially happen. I look at it on the 15-minute chart. With an hour to go in the session, I would love to see a few more sell programs kick in. That would indicate a very weak close that could very well lead to some further selling into the next few days. And you can see that sell-off that I just got done talking about. You can see it on the 5-minute chart. just over the past, the past hour or so, hour and a half, we have certainly seen another leg to the downside. It's nothing serious as of yet. It's further indication of a mixed market. All right. Now, how does that impact our actual trading? Because everything I've talked about so far is just trying to paint a picture of overall market environment. What I use for my actual entry and exit points, I like to use the 195-minute chart. All right. This is the chart that I use quite a bit. I use it on a daily basis to look at what I could potentially do as far as setups go. The 195 minutes is going to give you 2 candles a day instead of 1. The daily chart just tends to be a little bit slow. The 195-minute chart, it speeds things up. It definitely gives us more frequency, and it allows us to react faster to changes in overall market movement. If we take a look at the current environment, you can see this move on Monday, the one that we talked about earlier. We got up, made a new all-time high, and we have definitely been selling off since. The key reference point here is this red and blue line. This is the 8-period exponential moving average on the 195-minute. So far, that level has held. It held yesterday. You can see we came down. We tested that level. Until that level breaks, we are still looking at bullish momentum here. Even though we're off the highs on Monday, I am not looking to put on a long put position here until a few things happen. Number one, I want to see price action break the 8 EMA. I want to see it close below that blue line. And we've got our trend strength histogram down at the bottom. Right now, it's firmly blue. I need to see that flip below the 0 line in order to consider a long put position. Those are the things that I need to see fall into place over the next few days. So what am I doing on SPY? I don't have any long call or long put positions on at the moment. I'm currently flat. I would be open to utilizing some credit spreads. The reason I continue to look at credit spreads, a couple things here, actually. Let me pull back up Thinkorswim here. The VIX is still above 20. It's still above 24 at the moment. That is a very high level historically. When you get the VIX high, when the volatility market-wide is high, it causes the options to become more expensive. Doesn't mean you can't buy options. It just means it's going to be more expensive if you do. And you're going to need more to go right in your favor to make money. By utilizing a credit spread, it gives us a higher probability of success. It lowers the cost of the trade, and it gives us 5 ways of making money on the position. I am still looking at a fair number of credit spreads because they are more forgiving trades. You don't need as much to go right in your favor to still make money. Yes, you give up some of the home run profit potential, but I'm okay with that given the higher probability of success that we're going to have on those trades. I'm still going to be looking at long calls and long puts. Potentially, if we can get some further downside pressure over the next couple of days, I would be open to adding in some long puts. But for the time being, I would say my overall portfolio right now is 80% credit spreads, 20% long calls, long puts. That's the split that I'm currently looking at. And that's the split I'm going to continue to stick with, until we start to get some further downside pressure here on the 195 minutes. So again, on the SPY chart, nothing new to do for long calls, long puts, just waiting for some further downside pressure here to start. QQQ. This is the NASDAQ ETF. Go ahead and load this chart up. So a little bit different story over on the NASDAQ up until today has been the weak name out of the bunch. It's been lagging behind over the past couple of sessions. It actually led the reversal here earlier in the week. Couple things to point out. First of all, the NASDAQ moved to the downside, tested the white and yellow line. That's the 50-period EMA. It tested it yesterday and so far has bounced off of that level. Okay, it hasn't been anything significant as of yet. If we're going to get anything going on the downside on the NASDAQ, I need price action to get below that 50 EMA. I also need to see my trend strength indicator flip from blue to red. I need to go from bullish to bearish mode. And we don't have that yet. So I'm currently in a holding pattern. It's definitely on my radar. If we can get this thing to flip back over to the downside over the next couple of days, I would certainly be willing to consider some long puts there. Right now, at the moment, I am flat on QQQ. Now, when you start to go through and take a look at some of the individual stocks, the index ETFs for me, I just don't have much going at the moment. I just walked through that. But when you start to take a look at some of the individual stocks in the list, that's where I think there's more opportunity going into the second half of this week and into early next week. Let's talk about a couple of areas that are overdone on the upside. Let's talk about some of the financials. If you go back a couple of weeks, for those of you that have joined us the last couple of weeks, I talked about how I was looking for a pop up in the financials and how that could potentially be one of the catalysts to give us a move up to the all-time highs. I was not expecting that to happen so quickly. I thought it would take a little bit longer, but with the news, with the vaccine news coming out Monday, we certainly got a pretty big pop market-wide. When you take a look at the chart of JP Morgan, the long trade that we were looking at over the past week and a half or so, that one definitely hit target on the upside. Okay, that trade's been closed out. If you take a look at our pulse histogram, that's that blue and green histogram down towards the bottom of my chart. What does that indicate? When you see these blue bars right here, we had 4 of them in a row. That indicates that price is between a 3 and a 4 standard deviation move on the upside. In other words, we're very, very overbought in the near term. It does not mean JP Morgan can't continue to head higher. It just means it's not statistically probable. In all likelihood, out of that pattern, you're either going to get a period of consolidation or a reversal in the other direction. Over the past 2 candles, we have had those go from blue to green. What does that indicate? The green bars indicate price being between a 2 and a 3 standard deviation move on the upside. We're still very overbought. And notice what has happened since we started to get those blue and green bars on the pulse. See how price action started to roll over here a little bit, started to consolidate, and over the last 24 hours or so, we have seen this thing flip back to the downside. It doesn't mean JP Morgan's going to completely fall apart. It just means we're overdone looking for a potential pause in the near term. All right. This is a potential short call spread opportunity. If I sold an out of the money call spread here, it would give me a neutral to bearish position. I'd make money the fastest if JP Morgan moved to the downside, but I don't need it to. If we just sit right here and move straight sideways, I can still make money from that type of a trade. Here's how it's done. If we go over to the trade page, and I'll switch this from Lyft to JP Morgan. I talked about this over the weekend in our weekly recap. I am starting to transition almost exclusively to the December monthly options. Those are the ones with 37 days left expiration. I'm not saying you can't trade the weeklies in here. We have 3 different expiration cycles on the weekly side with 16, 23, and 30 days left. Couple things to caution you on with the weeklies. Number one, they don't have near the liquidity of the monthly options in most cases, meaning you're not going to have as high a volume and open interest. It just makes it more difficult to get fills on some of those trades. And then if you start to go out to the monthlies, it just gives you more time for your outlook to play out. So just know if you go with the weekly options, I'm not opposed to it. It's just a more aggressive approach. So you have to decide how aggressive do you want to be. For me personally, I prefer the December monthlies at this point. If I take a look at selling an out of the money call spread, I'm going to go to the call options on the left-hand side. And let's just go to, we've got $5 wide strikes here available to us. The current price of JP Morgan's at 114.30. I'm going to go to the 115 calls. I'm going to right click, go to sell, and go to vertical. It's going to pop up an order down at the bottom where I would be selling the 115 call and buying the 120 call at the same time. I'm trading 2 different options at the same time. This spread is currently trading for $1.88. So you can collect $188 per spread to put this position on, and it's requiring $312 of your capital per spread. The reason I like this trade is it gives us 5 ways of making money on the position. I make money if JP Morgan moves up, down, or sideways, as long as it stays below 116.88. That is my break-even point. Where is that number coming from? It's taking the 115 call that I'm selling as part of the spread. We're adding on the $1.88 credit that I'm collecting to open up the position, and that gives me my break-even. The current price is at 114.30. I've got about $2.50 where I can be wrong directionally. JP Morgan continue to move to the upside, and I'm still okay. The only move that hurts me is a big move above 116.88, which I'm not expecting because we just talked over on the chart about how overbought it is. The odds don't favor a big move higher from here. Possible, not probable. And if we do get that move higher, if I am dead wrong directionally, the most I can lose is $312. All right. We also make money as time decay adds up. Every day that passes, the time decay is working in our favor, and we make money as volatility decreases. So now we've got 5 ways of making money on the position. Right? It's a way to lean bearish in a more conservative way. If I take a look at just buying a long put on JP Morgan out in the December monthly options, and you're talking potentially, if you just go slightly in the money, you're talking about between $750 and over $1,100 a contract. We're able to lower it down to $300 by using the credit spread. It's just a better use of our capital at this point. So that is one trade that I am looking at here over the next couple of days. JP Morgan definitely on my radar. Another one of the financials that you could consider, lower price options, is Bank of America. Very similar looking chart pattern. We're overbought, explosive move to start the week. The long trade that the system identified last week definitely completed, definitely hit target. And if you take a look at the green bars on the pulse indicator, indicating price between a 2 and a 3 standard deviation move on the upside. We're overbought. All right. So definitely looking at a potential short call spread opportunity here on Bank of America. You can follow the same exact criteria that I just talked through on JP Morgan. It's just a lower price stock. So if you wanted to get into a position that's tying up less capital, Bank of America, certainly another route to go on the financials. Energy is another area that we've talked about over the past couple of weeks. For those of you that joined us, you heard I talked about how there was 2 key sectors that I was looking at for a potential wave to the upside. Wasn't looking at tech because tech had already made its move. Tech was already overbought. What I was looking at was either the energies or the financial sector, or both of them kicking it in to high gear. The financials have definitely been explosive on the upside, but energy, if you take a look at XLE, has also seen a nice move higher over the past couple of weeks. Down from around 27 all the way up to around 34.5 here today or yesterday afternoon. So definitely overdone on the upside. Definitely looking at a potential area where price could stall out. Why is that? Well, XLE, you can see the pulse indicator plotting yellow here, indicating price between a 1 and a 2 standard deviation move on the upside. In other words, we're at an area here that could lead to either a period of consolidation or a reversal to the downside. This is another potential candidate for a short call spread, just like the financials. And when I say a short call spread, please don't take that as I'm expecting XLE and JP Morgan and Bank of America to completely fall apart. That's not it at all. We're just taking a look at an opportunity to benefit from a pause, a well-deserved pause after this move to the upside. Now, let's take a look at some long put potential. What if you're not interested in the credit spreads? Fully understand. I highly recommend that you consider adding the credit spreads. I think they're very powerful. I think they should be a part of everybody's trade plan. But I also love to trade the long calls and long puts as well. I'd like to have a mix of trade types going. And Lyft, symbol LYFT, Lyft is one that I'm looking at for a potential long put. Here's what I'm looking at. This is the same 195-minute chart. You can see over the past couple of weeks, we have seen a move from below 22. In fact, we were down around 21.5. We got up all the way here this morning to a high of almost 39. That's a huge move. We're very, very overbought. Notice our trend strength indicator down at the bottom. Earlier in the week, got up all the way above 35. That is an extreme overbought condition. You do not see trend strength readings that high all that often. We had a double whammy here. We had the vaccine news Monday morning. We also had earnings out of Lyft, and it's caused this latest wave to the upside. And as a result, we are now extremely overbought. Could you come in and sell a call spread here? Sure. I wouldn't be opposed to taking that approach. What I was looking at doing here is potentially looking at a long put, looking for a move to the downside, looking for a pullback. We've got a couple of huge gaps on this chart. You've got a gap right here. You've also got a gap from a couple of weeks ago that could potentially lead to a pullback. Where would I be targeting? Well, at the very least, a move down into the 8 EMA, that solid blue line. I would love to see a test down there, currently sitting just below the 35 level. That would be a first area of reference on the downside. And here's how we decided to play it today. If I go over to Lyft, We were still using the December monthly options, as I talked about a few moments ago. Definitely want to be in the monthly cycle at this point. And we took a look at the 35 puts. Why did I go with the 35 puts? Well, I wanted to take a look at the volume and open interest numbers. Notice how those 35 puts have 7,100 contracts of open interest and over 700 have traded today. That's pretty good liquidity, right? We got filled at right around $2.10 earlier today. So we tied up $210 of capital. That's the most I can lose on the trade. This is a bearish position. So unlike the credit spreads that we just talked about a few moments ago that had 5 ways of making money, we've got 1 way of making money here on Lyft. This is an aggressive position that only makes money if Lyft moves to the downside. And it has to do so relatively quickly. Those monthly options have 37 days left. So we got a little bit of a cushion here, but sooner rather than later, we want to see this thing pull back, continue to move to the downside. So that was one of the bearish positions that we put on here today on Lyft. Again, we're targeting, ideally, I would love to see a 100% return on the options. I'd love to double my money. But again, from a technical perspective, we're looking for the 8-period EMA as a first point of reference on the downside price-wise. Las Vegas Sands, symbol LVS. Another one of those stocks that was definitely happy with the news, the vaccine news Monday. Got an extreme move to the upside, no doubt about it. So we're seeing a lot of these similar looking chart patterns, right? Everything we got done talking about here on Lyft and on some of the financials holds true here on LVS as well. We got extremely overbought to start the week. The pulse indicator is screaming overbought here. We had a blue and a green reading on the pulse. Typically will lead to either a period of consolidation or a reversal in the other direction. We're already starting to see that here. So this is another candidate potentially for either selling an out of the money call spread in the December monthly options, or just like we took a look at on Lyft, potentially a long put position is there as well. I like the credit spreads. In many cases, Lyft was one of those that I just got a long put on. I don't mind being a little bit more aggressive with some of these positions, but definitely trading way more credit spreads at this point. And then finally on Microsoft. So as much as we want to lean a little bit bearish, just given the overbought nature of this market, so far, all the positions that we talked about have been bearish in nature, right? Selling call spreads, buying long put on Lyft. Those are all bearish positions. I don't want to get into a situation where 100% of my portfolio is bullish or bearish. I want to have some diversification there because ultimately none of us know what's going to happen next. Even though the market is overbought, doesn't mean it has to reverse. We could very well see another leg to the upside. Microsoft is one of those names that is actually giving us a bullish potential trade here. Our trend strength indicator flipped from red to blue. Price action has moved up above our 8-period exponential moving average. And we did get a long setup at 217.93. Okay, this is a potential bullish trade that you could take with a long call. If I switch the symbol from Lyft to Microsoft, if we took a look at the call options on the left-hand side, Microsoft, very, very liquid. You're not going to have any problem getting filled on Microsoft. But they are a little bit more expensive. Volatility is higher. It's a $200 stock. So if you take a look at going slightly in the money, if you go to either the 210 or the 215 calls, you're talking about between $850 and $1,150. They are expensive. I don't mind that. That cost doesn't bother me. But if you're looking at that same mic, I've got a smaller account size, I don't want to be that aggressive, that's fine. You could certainly turn this into a vertical spread. I wouldn't have a problem with that. If you wanted to use a credit spread here and sell a put spread, certainly a viable way to play to the upside. But in this case, we're talking about a long call here. The 210 calls, those are the ones that I have highlighted here. Plenty of volume and open interest. Has a delta of 0.65. That's right inside of the sweet spot that I like to see. So I like the 210 calls, but they are over $1,100 a contract. So they are a little rich, a little expensive. So if you're concerned with that, just turn it into a vertical spread. I wouldn't have a problem with that. As long as you have a bullish position on here, perfectly fine with that approach. So those are some of the names that I'm looking at here going into the end of the week. Again, bearish positions, Lyft, LVS, either JP Morgan or Bank of America. Has some potential there in the financials, and then a bullish potential there on Microsoft. Those are some trades that I'm looking at for the next couple of days. All right. So if you have any questions on any markets that I have not covered, feel free to type those into the chat. I will get a link up. So the link that I just put on the screen, we are just releasing a brand new service. Some of you have heard me talk about the overnight pop trades in recent sessions here on YouTube and Facebook Live. The overnight pop trades are trades that we're looking to put on going into an options expiration cycle. They are overnight trades. They're in and out in 24 hours or less. We've had really nice success with those trades. The link that I have up on the screen, netpicks.com/OPT. If you go to that link, there's a video there that will explain to you how the service works in more detail. Love to have you take a look, give us some feedback on that webinar. If you have any questions there, I'd love to connect and help out. My email, mike@netpicks.com. We are running some pretty great offers with that service. So feel free to join us for that webinar. Again, netpicks.com/OPT. We'd love to have you take a look. So at this point, let me just take a quick peek at the comments here. I don't see any comments coming through, so I'm going to wrap up for the day. I will be back on Friday as we wrap up the week for our weekly recap, and we'll see what the market gives us going into the end of the week. So enjoy your afternoon, everybody, and hope to see you on Friday. We'll typically be live Fridays right around midday. So we'll see you around 12 o'clock Eastern on Friday.